Welcome to the Steadyhand video. I'm Tom Bradley, President of Steadyhand Investment Funds. I have with me today Magnus Larsson, who's the Portfolio Manager at TimesSquare Capital Management. And Magnus is our lead manager on our Global Small Cap Equity Fund. And that's the topic today. We're going to do an update on the fund. Maybe before we start, let's just remind our viewers what your mandate is with this fund and how it's set up.
So the mandate is really to look at global equities, small caps. So it gives us a wide range of opportunities all over the world to go out there and find high quality growth companies.
When I look at the portfolio, there's not a lot of company names that I know, or at least I knew before we got involved with TimesSquare. Certainly no household names. Magnus, maybe you could take us through an example of a company in there, because I think you and your colleagues have said that many of them are world leaders in what they do, even though we don't know who they are.
Absolutely, Tom. So we've got Horiba in the portfolio, a Japanese company that has approximately 70% of the global market share for emission testing for vehicles. As you know, there was a scandal a few years ago. Big manufacturers was, cheating with the numbers, but it was Horiba's equipment that detected it.
Now, there's some sectors that you're finding attractive right now, specifically financial services and technology. Maybe we can start with financial services. When Canadian investors think of financial services, they think banks, banks, and banks. But I think your mix is much more diversified that way. Maybe talk about what you've got in that sector of the portfolio.
Absolutely. So you're absolutely right. The financial service sector is dominated by banks, but I think banks as a sector are also the most challenged. They are often running on old IT, ancient platforms, tons of branches no one goes to anymore. So what you see there are sector specialists that breaks in and are nibbling away market share by simply being faster, better technology users, basically everything that the incumbent banks aren't.
So Magnus, give us an example of a company that is like that.
So we have several examples. I think by using maybe the strangest example is actually a bank, Fineco in Italy. They are an online bank only, so they have new technology, no branches, and no problem with non-performing loans. So whereas the Italian banking sector is one of the most challenged in the world, we also find the greatest opportunity there.
Moving on to technology, this is a sector that's had a great run over the last 5+ years. Where are you finding value in the technology sector?
Well, certainly not in the FANGs or the FANG offsprings. Our holdings are much less sexy than that. More data processing, equipment for efficiency gains for the customers. We really don't run after all those names that are trading on nosebleed multiples. We avoid them at all costs. Maybe
let's dig into a name there. Give us an example.
So one of the examples of technology company I think are doing well is Altran Technologies, a French company, but again global. They are basically providing the aerospace industry, the car industry, telecom industry with access to really sophisticated teams of engineers. You can mainly call it like a manpower for rocket scientists.
Magnus, I know you don't worry about where companies are based, and certainly that's in line with our philosophy. We try and erase the borders and not worry about that. But I couldn't help but notice that we have quite a few Japanese companies, and I've never thought of Japan as being a hotbed for small cap investing. Maybe you could explain what you're finding there.
Absolutely. So the common knowledge is that Japan is not a place to invest. Significant demographic headwinds, poor corporate governance, many reasons not to go there. We see it differently because in Japan, when you do find companies that are exceptionally good at what they do and have good corporate governance, their opportunity to continue to outperform their competition is much greater than anywhere else in the world, simply because it is true that the general Japanese companies are not that well managed.
Let's talk about a Japanese stock that we own.
Let's talk about ABC Mart, a shoe retailer. Doesn't sound fancy, but when you look at how good they are doing, they are actually turning over 4 times as many shoes per square foot of retail space as the competition, simply by allowing the local managers to have a say. Very un-Japanese, very successful, and the competition is absolutely miles behind.
And finally, Magnus, you have the scope to invest anywhere in the world, including fast-growing emerging markets like India and China. What's your approach in those kind of regions, and maybe give us an example of a stock you've bought there?
So the approach is basically the same, focusing on tremendously well-managed companies with really strong business models, often the very leaders in what they do. A very recent example would be Croton, the leading company in Brazil for education, both offline with campuses and online as well. What you need to do in emerging markets generally is that not only the same thing as in developed, but you also need to have an even deeper understanding for what's going on locally and having an understanding for the macroeconomics.
Well, Magnus, thank you for joining us today. We really appreciate you coming to Toronto and doing this session.
Thank you so much for having me.
And thank you for watching. If you have any questions on what you've heard today or on the Global Small Cap Equity Fund, don't hesitate to call us. Until next time, take care.